What's good, guys? Let's go over the trade recap for today and why I was looking short. So yesterday yesterday was Monday, the start of the week, and price had open high into its relevant swing, which is just this Friday high, and we created some bearish SMT there with ES. So as soon as I saw that, and price started to expand away, which it did, right on the 30-minute and the hourly. The hourly was super clean. We created a swing point, we closed below, we trade away, and then we get this continuation from that Monday New York session. Now, seeing that and understanding that I wanted this weekly fair value gap down here as my draw, which it got hit today, going into the next day, I wanted to see price respect the wick CE, and I was looking for a key level, which was potentially the 7-hour fair value gap. And whenever that price fails to hit this and then expands away, typically you can see this as the high of day. And especially when you have a relevant swing like this and it's closed below, typically you don't want to see price expand 300 points and then it go like this, right? After it's expand, you don't want it to go like this. That would just be a large opposing run for no reason and most likely would limit the ADR to the downside. So once I saw this during the Asia session kind of start to expand, when I was just sort of looking to see if there was going to be any potential entries and or any sort of higher time frame for value gap taps, and none of that happened really. We kind of just used the hourly gaps. There's no 4-hour or 7-hour taps during the overnight session, and so I chose to not trade the Asia session. And this is what the chart was looking like when I woke up this morning. So when I go to the New York session, all I really need is an hourly PD ray. That is my main. That's something that I do like to look for if I'm looking for a swing point to get created, or a 30-minute, 15-minute works as well. But hourly is something that I do prefer. I don't need a 4 or 7-hour key level for the New York session, especially when our price has already created the potential high of day. And you can see again, you're able to use these lower time frame PD rays because again, you wouldn't want price. Say this was high of day, right? Or this is high of day. Make this red, it's a little easier to see. You wouldn't want price to, when it's all the way down here, to just go like this, ideally, and that's exactly what price does. So price respects this hourly for value gap right at 8:30. Price is giving us this change in the state of delivery. I don't like this. These up close candles are not large enough, in my opinion. Not something that I would have trusted to enter off of. I don't really like all of this consolidation either, and so I chose to wait for 9:30, and this is what happened at 9:30. Price had opened high into, right, if we look at the 30-minute, that's sort of what I was looking for. And also I wanted to see if price would respect this 30-minute opposing candles, which it did, but it wasn't something that I would have entered off of. So price just takes out this swing high here and immediately reverses. And this is exactly what I'm looking for when I'm looking for a trade. And around the open, I sort of depending on the day, and since I am trading against higher time frame order flow, I'm not as aggressive when looking for an entry. So as aggressive meaning the lower time frame, meaning the 3 and the 4 minute. So this could be your potential entry, or you could wait for a retrace. And this is fine. Just sometimes around the open like this, and when it's not the perfect ideal development, since ideally I would have liked price to just create this CSD here, right? Pretty much immediately after the driver. It doesn't do that. It takes a little bit of time. We also had some SMT with ES, which is also what gave me a little bit of added confluence. As you can see, if we look at the 30-minute, you can see this swing high here at 9 o'clock, and this swing high at 9 o'clock was never taken. And then both assets are starting to reverse. That's why I also chose to use the 5-minute, because price was not being, it wasn't as pretty as I had wanted it to. So I waited for this next 5-minute closure, and I just waited for a retest. Now both assets are now in sync. ES, you can see, is the stronger asset here. It's not giving as deep of a closure, and it's the one that already hit its weekly fair value gap. So I was looking for NASDAQ to potentially become weaker now and start to get in sync and hit this weekly key level, which was 533, 29,533. And so I just waited for a retest of this opening price. We actually missed our fill rate here by 2 points, and then thankfully price had taken out this low. It had just retraced back to equilibrium or premium of this range. We got filled in right here, had very little drawdown. We got filled at 685, and price had created this next continuation signature. So as soon as I saw this, I trailed my stop loss. Why do I trail my stop loss? Well, price is engaging in a fair value gap. If we look on this 4-minute time frame, we had this nice 4-minute fair value gap on NASDAQ. If this would load, yep, there it is. We create this swing point here. Then we create a change in the state of delivery. So in my head, in a continuation phase of price, opposing candles being respected, new opposing candle created, nice swing point, large enough candle bodies for me, I trail my stop loss. So now instead of my regular risk with 2 contracts, which was up here at 753, that's where our stop loss was. And you can see this was our original risk to reward. So a little over a 2-hour trade. I then move my stop loss all over here. So now we only have 20 points of risk instead of 66. So large reduce in risk there, and price ends up sort of going lower, and then it comes back all the way inside the range, almost actually stops us out, and again is just consolidating at equilibrium of the range, and then we finally started to get some displacement lower there, and then we got TP shortly after, which was right there. And the reason why I took out all my contracts at this low is because there's no reason for me to try to hold when ES is already at the objective, NASDAQ had just reached the objective, the ADR has already been larger than it has been over the last like 10 days, and there's no reason for me to try and be greedy and hold. And in this case, you can see we would have actually never gotten anything more out of this day. So that is exactly the reason why I did what I did, how I managed the position, why I entered, and this is how I pair 930 as a confirmation for what I'm looking for on the day, when the daily profile has already sort of confirmed what I was looking for. 930 is just that added confluence, and then I'm getting that continuation signature to end up putting on risk, which was this entry here right at 10 a.m. Hope you guys enjoyed. As always, if you have any questions, let me know, and I'll see you in the next one.